morning, ladies and gentlemen of the press. I think this is just an opportunity to reiterate what message we have passed at the breakfast upstairs in terms of our results and operating highlights. For purposes of just reconfirmation, I want to confirm from a financial point of view, our passenger numbers improved 5.4% to 4.5 million passengers, which is the highest KQ has ever carried. So we are growing. Cabin factor, which is a measure of the efficiency or utilization of the cabin space that we have, is up 4% to 72.3%. We've carried more people relative to our focus in Africa, growing in Africa 13% year on year, which is a manifestation of the improvement in the connectivity around Africa. And we are utilizing our aircraft more. We increased the block hours, the flying hours of our aircraft, 5.3%, as we increase the utilization of particularly the Embraer aircraft and the 787 aircraft, 18% year on year. From a financial highlights point of view, our gross profit is up 35.7%. Our operating profit, positive 900 million, a swing of 5 billion from 4.1 billion last year. And our loss after tax reduced sharply from 25 billion to 10 billion. Now, what is important to note also about those results is that if you exclude one-off impacts from the investment in the restructuring, the investment in impairment, as Dick mentioned, and the one-off asset sales, our results would have been 4.3 billion Kenya shillings at operating level, which at industry level is actually in good territory. Industry average is between 3 and 5%. And so if you exclude those, that would have been fairly good results. When I look at what we've been focusing on over the years, we've mentioned Operation Pride is well and truly embedded. And I know Michael will have some comments about that. And I think the important thing is to mention that the turnaround is actually happening. And the results of that turnaround are actually reflected in these results. What we are focused on now, going forward, is on what we announced in July last year, which is the focus on the capital optimization. The capital optimization is a complex process. It involves us discussing with a number of our financiers, a number of our stakeholders, around how we can improve the debt profile of the company, i.e. reducing the overall debt of the business, and secondly, how we can improve the liquidity, which is the financing ability of the company to allow the company to grow. I'm sure you will have some questions to ask on the results and clarifications that you seek. Maybe Michael will have some sound bites on the results.
Yeah, thanks, Mbuvi. I think we've, as you've seen, the results are very good, very positive, show a very, very good trend. I think what I would like to say is that if you look at Africa, I think, if I'm not wrong, we are probably one of the only, if the only publicly owned airline that is viable and profitable in Africa, if you look around it now. And I think that's really important to see, that we are not funded by the state, we're not state-owned, we are publicly owned, as you know. And yeah, we have gone through some really tough times, and we are coming out of those tough times. And I think it's important that all the initiatives that have been done by Kenya Airways over the last year are bearing fruit in terms of the operational performance. I'm sure you've had many comments and heard all the many comments about late arrivals, or late departures, no departures at all. I think we've done a lot of work in that area, and I think and we are definitely seeing an improvement in our operations, just in the terms of the on-time performance. I mean, Vincent, I don't know what the figures are, but probably offhand that the figures are in the 85%, 87%, correct, 85%, 90% of our flights are operating on time, which is really, really good. And this improves, it doesn't just improve the financial performance of the airline, but also from the morale, the staff morale, and people start to believe in us. And I think what's important going forward is to understand that, yes, we're coming, we're seeing some positive light at the end of the tunnel. We are showing some good results. We have some ways to go. We're not there yet. We probably have another 6, 9, 12 months before we really see ourselves coming out of this. And of course, lots of that is dependent on external factors which are not in our control. But I think what I also want to say here is that, going through this financial restructuring, we have had enormous support from our stakeholders, from the shareholders, the government of Kenya, KLM, the various people who own our aeroplanes, who've lent us money to buy the aeroplanes, our staff, the unions. We've had huge support from them all. So I think all these pieces are coming together to make us, to make this turnaround, viable and profitable. And that's what I see. But I want the message to go out is that we are Kenya's airline. We matter in this economy enormously. People come to Nairobi, just to repeat myself, corporations headquarter themselves in Nairobi because of Kenya Airways. Number one, because of the communication and the flexibility and the flights, the direct flights that we have across Africa and internationally. Thank you.
Thank you. So questions?
Floor is open. John Atkinby from the Financial Times. Can you give us more details on the recapitalisation programme? You said in the next couple of months, so what does that mean? Is it going to be a one-off, sort of big bang restructuring? Is it going to be sort of diluting shareholders, debt for equity swaps? What's being considered at the moment? Can you give us a few details, please? And secondly, what actually is your net debt at the moment? Because there are all sorts of, it wasn't sort of quite clear upstairs that what your current net debt is. Sort of that.
Okay, good. Thank you for that question. You probably would understand that when you're going through as complex a capital optimization or restructuring as this, the devil is in the detail, and we can't discuss the details of that until we are ready. It's one of those things is, unless you're at the huddle, unless you're at the end point, then you can actually talk about in detail. All we can say is what the objectives are, and I shared the two objectives, and I think the important thing is to say that we have engaged all our different partners and stakeholders in this process in terms of what it is that we are trying to achieve to meet those two objectives. Fairly soon we'll be able to share that. The timing is slightly predicated on the conversations we are having, but as Michael said, I will stay on to be involved in that process, in finalizing that process, and we hope we'll be able to come back to the market soon enough with the answer. I don't want to put a date or a timeline which you hold us to, because I think it's better we get it done and announce it rather than say we'll do it by this date.
Net debt position?
The net debt position today, I don't have it at hand. I would have to get that to you.
But it's still in excess of $1 billion.
It's still in excess of $1 billion, of course, yes, because we have positions around the assets we finance through our finance lessors. We have debt on the balance sheet from banks, so there is debt. So not significantly changed from last year, actually.
I think I can say, without sort of prejudicing what we could say, is that what we're talking about is restructuring of that debt in terms of repayment terms and length of repayment terms, so that the cash flow, it eases the cash flow, the short-term and medium-term cash flow for us. That's one of the main objectives. The debt will probably remain, but it will just be stretched out longer, so it'll make it easier for us. I think I can say that safely.
You can say that.
I can say that, and then all the other things that go along with that. You've seen that we've sold the aircraft. We still have aircraft that with Turkish Airlines, and we sold most of the aircraft that we don't have now. So all the impairments have gone now. So now it's a matter of focusing on milking. Not milking, is that the right word?
Sweating the assets.
Our assets,
yes.
and hopefully, as we come out of this phase, we will bring some of those aircraft back as well. But I think the net debt probably will remain for a while. It's just a changing in the cash flow of the company, making it in a stronger position. Not just in a stronger position, but also in a stronger position to actually improve the operational performance of the airline as well.
Let's move to record.
Kennedy from Capital. Michael, you talked about senior management changes, or you said improvements. Maybe you could add on that. And on the new CEO, you said that he's coming to turnaround. Does that mean that he's going to leave after the turnaround?
Well, okay. It's very public. We have recruited a international experienced airline executive specifically to turn around the airline. Okay, it's a 3-year contract. Okay, it can be extended, but that is the objective of that's his main objective. Now, we might keep him here forever, but the short-term objective is to turn around the airline, and that's that's what his role is going to be. Now, when I say turnaround, the turnaround has already begun, because I don't want to diminish what Mbuvi has already done. The turnaround has begun. Is to continue with it, and that's why I think that we need an experienced airline executive. It would have been very easy to say let's just hire another Kenyan, but I wanted to have that experience on hand. From the top team, I think what you will see is on the top team. I don't think you'll see any changes in the top team. Maybe some additions in the top team to strengthen the top team. Vincent here is the head of the commercial. He's new to the airline, 6 months now. 6 months. And you'll see others join, but it'll mostly be strengthening the top team to help in that turnaround. As you know, and I don't want to diminish what the team has done because they have done a great job. The airline industry is extremely complex and it changes all the time, and we need to make sure that we're doing the right things all the time. So we will also maximize the use of our strategic partner, KLM, who have operate a much bigger airline than we do and have a lot of expertise. We'll bring in some of that expertise as well to help us in turning around the airline. There may be some more efficiencies we could find in how we operate, to make us a more efficient airline. As you know, we operate with a limited amount. We have so many aircraft. We don't have any spares sitting around there waiting in case something goes wrong, and therefore we need to turn them around very quickly, and we need to do that better as well.
Yes. Thank you very much, Adina from KTN. 2 questions to Michael, 2 questions to Mbuvi. Let me start with Michael. From where you sit, you've been at the helm for just under a year, and we are seeing some changes coming through already. Perhaps what is the sentiment around the share price? We've seen KQ share price has taken a big hit. Now it's at around 5 shillings. Perhaps comment on that. Secondly, now that we are having a new CEO coming in place, what are some of the low-hanging fruits that you'll be quickly looking forward to turning around? And to Mbuvi, having served as the chief captain at the airline, perhaps I'd like to get your position on, as you've been trying to turn around the airline, of course, there are very tough decisions you have to take, including staff rationalization, and of course, leasing and selling some of your aircraft. Over and above this, there's also the bigger issues around the fuel costs. Perhaps if you could elaborate further, moving forward, what sort of trends are we likely to see, especially when it comes to fuel pricing for the airline? Secondly, as you leave the airline, what's your next move?
I'll just deal with you. I don't know where the share price is today.
6.55.
I think it has gone up, right?
Yeah, it's about 6.
I've been here since October. I think the share price went up. I don't think there's any rationale in the share price, by the way. I've never seen any rationale. You can ask the Financial Times, why does the share price go up or down? It's got nothing to do sometimes with the operation performance of the airline, But I think what will be the low-hanging fruit? I think the low-hanging fruit obviously will be the optimization of the revenue on the revenue side. Can we get more revenue from existing routes? Can we get more revenue from new routes? We're looking at new routes, obviously, the flights to the US. This will be, I think this will be low-hanging fruit, and I don't think it's low-hanging because I think that has already been done already. I think it's more higher-hanging fruits now. Is now optimization of the revenue, improving the revenue line, because I think we've taken a lot of cost out of the business, and and I've said it publicly. I don't think we want to do any more staff rationalizations. It's a tough thing to do. We're down to 3,500 people. I don't think we want to do more of that. It's more now improving on the revenue side, and it can be done. And I mean, everybody flies here. We can do more. What we don't want to do, and I think I have to always hold back the commercial guy, because he will want to charge you $7,000 to fly to Mombasa, and $2 to fly to Johannesburg, and so we have to just manage that balance very carefully. We need the Kenyan public on our side. They are our mainstay, and we need to keep that. That's important.
So on the turnaround, I think, as Michael says, there's been a lot of heavy lifting that has been done. If you look at the context of the turnaround, we had a big capacity issue, which was around aircraft that we were not utilizing, and we had to get those out of the system by subleasing and selling. We've done a lot of structuring in terms of negotiating contracts with people. This is all part of Operation Pride, which we've talked about. Michael alludes to the fact that we are going through a revenue and sales transformation. we revisited that area, and we are already seeing the benefits of the restructuring that's happening there. So I would say, all the 340 plus initiatives, and by the way, when I talk about initiatives, we are talking about, somebody actually focusing on an issue and saying, if it's around, for example, contract negotiation or pricing, what do we want to do? What is the objective? What will be the result? And following through and having accountability. It's been tough going, but now it's a way of doing business. So when Michael talks about the fact that the turnaround is embedded, that's what he's talking about. When I look at fuel is up and down today. I think what we've seen over the last year, the first half of the year, fuel prices were low, and that's why we saw the madness globally, because of the capacity market growing faster in capacity than passenger numbers and fuel prices. That combination led to a fairly lower yield environment, and it's impacting everybody. The price has been firming up over the last 6 months, but it's not yet reflected in pricing. I expect that fuel prices will stay probably right now, and that's just my view, it's not a KQ view, that I think we'll see it range bound in the early 50s for now, because there's ups and downs. I saw North America is releasing their reserves right now, so it will have an impact on prices. So from an industry point of view, the expectation that it will stay range bound for a while, and so there should be a bit more sobriety in terms of the results of the airline. What is my next move? Michael has asked me to stay on as a financial advisor for the business for another 2 months as we go through the financial restructuring. After that, I'll take a well-deserved rest.
We go to the back and come to Bella.
Alex Moon from NTV. 2 questions for you, Vincent. With the benefit of hindsight, would you say fuel hedging was the right strategy for the airline? And secondly, what percentage of Operation Pride has been executed?
So fuel hedging is a risk management strategy. It is not a gamble. Fuel hedging is not a gamble. If you look across the world, a lot of airlines were actually in fuel hedging. The question is always the extent to which you hedge, which is, what percentage of your fuel and the duration over which you hedge. Now, nobody could have anticipated the sharp drop in fuel prices that happened at the back end of 2013, 2014, which saw a collapse of prices. And effectively what happened, despite the fact that we were only paying the difference between the hedge price and the actual contract price, from an accounting point of view, you had to book the difference between $30 and whatever that price was as unrealized hedge differences. And so from an accounting point of view, it's a nonsense, but that's the reality. In terms of Operation Pride initiatives, we have booked about 72% of them so far.
Morning. I wanted to know, sorry, my name is Bella from Bloomberg. I wanted to know the kind of agreement you came with, your company came up with the Nigerian government or another countries in terms of repatriation. How much have you received, and are you able to tell when you be expecting the payments?
So if you recall early last year, what happened in Nigeria, the currency really dropped down from sort of 200 naira to almost close to 400 naira. And what we had to do is, working with the IATA and with the Nigerian government, is to find a mechanism. First of all, there was almost $400 million from the industry that was stuck in Nigeria. And the government in the back end of the year has developed an option where you actually buy forwards, and you buy forwards at a fixed price. So you know with certainty what your repatriation will be within a certain time. And we are beginning to see those flows. Actually, when we were announcing our results in September, I think we told you we had about $6 or $7 million stuck in Nigeria. That has reduced, but you remember we are trading on a continuous basis. But now what we have is more certainty in terms of the price point at which we will actually repatriate our funds, and we can be able to also have a certainty in terms of timing. So that has improved. The overall debt from the industry is still high, but it's come down from the 400s. The industry still has problems with Sudan and with Angola. With Egypt, I think that has softened now. It has improved as their currency, as the dollars have become more available. But Angola and Sudan are still, North Sudan are still a challenge. And we're working with the governments there to try and figure out how to find the right solution.
Should we do a round of closing? Yes, starting with Mutegi at the back.
Mine, to move it back to Vincent Carlas's
When Michael joined as chairman, he talked to me about the pricing strategy at KQ in terms of ticket prices. And again, I'm seeing that the capacity, despite capacity reducing, your numbers are still improving. Half year, full year still going up. What are the exact measures that you have done, that you have instituted, Movie or Vincent?
I think I can take that, and Vincent can probably comment. I think it's important to understand that there are a lot of things we've been doing. The first thing we told you is that we've restructured our hub to improve the connectivity. What does that mean? We have more flights able to connect at different times during the day, and that increased the sellability of our network. That's an important part. The second thing is that from a pricing point of view, it's clear that competitiveness, we have to be competitive, and that's part of the repricing strategy that Michael was talking about, which is part of our revenue transformation. 2 years ago, we conducted a commercial diagnostic which showed us that we still had some maturity that was required in terms of our pricing. The third thing is increasing frequencies. If you give people options to fly to places, for example, today we fly to Entebbe certain times of the year up to 6 times a day. We are able to do Joburg, morning, noon, evening, Lusaka, Lilongwe, name, the list goes on and on. When you're giving people the options in terms of being able to have that flexibility, you definitely increase the sellability of your network, and those are important points. On the sales side also, there's a lot of effort. We have changed people. We've changed sales executives, we've changed sales managers, just to increase our aggressiveness and hunger in the market. Vincent, I don't know whether you want to...
You have to just hold him back. Huh?
I hold him back.
No, it's true that we are definitely much more aggressive in terms of pricing. The first thing we did when I arrived was to look at our benchmarking strategy for all what we call the origin destination, so all the traffic flows for the 50 countries where Kenya Airways operates, to make sure that we have a strategy and we are competitive. So as you know, there are some destinations where we have a lot of competition, and clearly for us, it's a watch and match strategy. We are going to be aligned with competition. What we have done also in terms of aggressiveness, and you have seen it in Kenya, is to be aggressive also in terms of promotional initiatives. You remember the campaign KQ at 40. We did also Take a Break campaign, and we'll be much more dynamic over the next coming months, weeks, in terms of offers, especially for the Kenyan market. And last but not least, we innovate. We want to create products that appeal to our customers. We came up not too long ago with a product called the Flight Pass, which allows you, if you buy in advance 5, 10, 20 tickets for a specific destination, to have very significant discounts. So in the future, we are planning also to come up with more innovation like this, to be very active and very appealing for the market.
Yeah, the lady, and then come this way. Yeah.
Just to build up on what
Your name, please, and
Brenda Kirumo from K24. Just in relation to build up to what he's saying, that's what you've done. What are some of the initiatives that you're going to do, especially in relation to Africa going forward, so as to continue increasing sales? This, of course, considering the headwinds of the currency depreciation and civil unrest also in some markets, as well as other challenges being witnessed across Africa. What are some of the plans that you've lined up to increase sales? Because clearly it's a potential market space for this. And also I get a commentary from Michael as well.
Let me just, I'll let Mbuvi and maybe Vincent be more competent to answer that question. I can answer for you, but I think they're more professional about it than me. Okay, but I think one thing we do need to say is that we need to be focused on being profitable, and it's really important from an investor point of view, from the future point of view, is that wherever we fly and whatever we do, we need to make sure that we keep an eye on the profitability of every route. But I think we are, and I think Mbuvi and Vincent can answer. But I think we in the next few months, when the new CEO arrives, naturally we will look at new routes, enhancing existing routes, changing maybe aircraft on existing routes. All these things will be looked at. But I don't think we want to give away too much at this point to what we plan to do. I think it would be not good for us from a competition point of view. But I think the board and the team are looking very carefully at everything we can do to maximize, as I said right in the very beginning, maximize the revenue opportunity. Remember, once a plane takes off and there's an empty seat on that plane, that's revenue lost. So that's very part of our focus.
Yeah, I would say, first of all, something I mentioned upstairs, which is the fact that we know how to do business in Africa. More than 60% of our revenue is Africa, and therefore we understand the risks that go. Every year there is 5-6 elections in Africa. So we are always going through these swings and roundabouts, and we understand how to do that business. Our exposure to any one country is not that significant to have a big impact on KQ, and therefore you're able to probably reduce at a level of frequencies and adjust according to the requirements. I think that's one thing in terms of our ability to understand the context in which we're working. What you can see and what you've seen is the fact that we have increased the connectivity at the hub allows us to sell more potential seats right across our network. The fact that we are increasing frequencies into Africa, into existing destinations into Africa, and into new destinations means that we are able to give people the option to travel on KQ in order to be attracted into KQ. You mentioned about currencies. I think those are things that we don't have control of, but what we are doing, using the industry associations, working with governments to find a way to repatriate, because if you cannot repatriate your money, then actually you shouldn't be. You really will look at whether you continue doing business there. And the governments in a lot of countries do understand that. So they work to find a way to actually get us, to get our money out. I mean, Michael says that if you give away everything here at the table, you'll have nothing to surprise the market with. Vincent, I guess you've talked about innovation and all.
No.
So you'd rather hold your counsel right now.
I'm not going to share too much. Maybe one message is to say that we are very, very tactical and very aggressive in our approach, in our commercial approach. We are looking with the entire commercial team on a weekly basis at the forward bookings for each of the countries where we operate, which means we can take decisions in terms of pricings, in terms of inventory, in terms of promotions, in terms of network planning. So we are using our fleet in a tactical way when we see that the situation for competitive reason or for market reason is deteriorating or improving. We can increase capacity or decrease capacity in a very tactical way. And we do this exercise on a weekly basis. Every Monday we receive the forward booking, we look with the team at the entire network, and we take decisions. So it's a very dynamic way of doing business in commercial.
Good. Any other
Closing?
last burning
Who
ones?
wants to take, closing ones? Abby?
Well, Mbovi, is it a fair assessment, going by the results, to say that the airline is gradually coming out of turbulence and you're perhaps now cruising on the right flight path? And how soon should we expect a ceiling on the losses?
I think we announced
Don't use that word cruising.
cruising.
Don't use that word. We're not cruising
when
anywhere.
when we announced our operational turnaround a year and a half ago, we said it would be 18 to 24 months before we saw a sense of stability. I think we're in the right trajectory. I think we've seen that we are now in an operating profit situation. We've seen that if you exclude the one-offs, we are in a much firmer territory. But we've also said that there is a part that we've got to deal with, which is the financing part that actually is the one that defines below operating margin. And there's work that is being done. I feel confident and I feel proud to be leaving the airline in a position that is much stronger than I took over because of all the actions we've taken. And I think the airline is in the industry is a turbulent industry. But I think all the actions that have been taken and the ones that will be taken will put it in a more efficient and better position to be able to fight in a market that is changing.
I just want to make sure that we understand. I mean, we are not cruising, and I don't think we ever will cruise in this industry. It's not that kind of industry that you cruise.
Yeah.
But I think, even though we are starting to come out of this curve, of this downturn, and we're seeing the light, and I said we're improving, you saw the results, we're not going to rest there. We want to be a very, very strong, profitable airline. And that will take some time. But that's our objective. We don't want to have our aircraft sitting with other airlines. We want them back here earning money for us, real money for us. So that's our objective. So we're not going to say, okay, right, we've now back to where we were 4 years ago. That's not going to be, it's not acceptable. We need to continue to grow this airline. So, remember, we have a strong competitor. Our biggest competitor is Ethiopian Airlines. state-owned, state-subsidized, you know, no unions, nothing like that. It's a very powerful competitor, and they are big, and they are our direct competitors. So we must never forget that. You know, that we will be faced with strong competition going forward.
Yeah, I think that's it. Thank you,
Sure.
Michael.
Thank you.
Mbuvi,
Thank you.
Vincent.
Thank you.
Thank you.
Press, make sure you leave us with your email.